Hello everyone, welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. You can post questions, comments, and content related to the topics of my presentation and the topics of my channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. Here are the key tenets to my approach to trading. And for those of you who've seen my webinars before, please bear with me. I want to make sure everyone understands at least the basis of my approach to trading. It's a little bit different from many other traders. So here are the key tenets. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. And that certainly applies to large cap tech stocks, as well as the equity index futures, and that also drives the stocks and index futures that I choose to trade. So for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and the S futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with the S futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned at the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day as well as the directional bias. And the second step in my process is execution. I look at real-time order flow on Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer questions. And hello, Amir. Welcome. Glad you're here. And by the way, if you post your comments in Discord, it'll work much better. I think there is a delay on YouTube for posting questions and comments. There's no delay in the Options-Doug chat channel in Discord. So again, questions, comments are welcome, and you can post in YouTube or preferably in the Options-Doug chat channel, or preferably. Here's my agenda for today, Wednesday, October 1st. First of all, I want to go over news items, economic data, and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. Then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know. I'll be glad to do that. Hello, Rhodey. Welcome. Glad you're here. All right, let's get started with news items. And I'm going to go take a look at the ES futures of Bookmap. All right, so I'm sure everyone is aware the U.S. government shutdown began at midnight last night. And there was a little bit of a move lower overnight. And now this is, again, the ES futures trading higher. So this is showing all the way to the opening yesterday evening. Low of the day, just above the ES lower daily expected move. And now it appears that ES is breaking above the SPX 6700 absolute gamma strike call wall. More about that in just a couple minutes. All right, so news again. Currently, the Congress was not able to resolve their differences and pass a funding bill, so the government is shut down. All right, so news today. There was the ADP employment report, and that's private payrolls, and that came in negative. So that was less than expected, less than the previous number. Then at 10 a.m., ISM manufacturing PMI came out. That's private data, and that was greater than expected, greater than the previous number, but less than 50, indicating contraction. All right, so coming up for the rest of the week, normally jobless claims comes out, that data comes out every Thursday morning at 8:30, and with the government shutdown, Bureau of Labor Statistics will not be reporting the jobless claims on Thursday or the jobs report on Friday. But on Friday, the ISM Services PMI should come out at 10 a.m. All right, then also knows Tesla will be reporting Q3 deliveries tomorrow morning. All right, so that's the news coming up for today as well as the rest of the week. All right, so let's move on to positional analysis. Again, this is the S&P 500 ES futures in Bookmap, and there's been some key reactions at levels. Again, overnight, ES lower daily expected move, and that was the expected move for NQ was also in play overnight. We'll take a look at that in just a couple of minutes. And then right now, the SPX 6700 absolute gamma strike call wall is in play. All right, so let's step back. Let's take a look at our higher time frame and take a look at some of those levels. So we can start with SPX. This is a 1 year, 1 day chart for SPX. And the current rally began right around April 8th. Rally, SPX continues to move higher. Looking at more recent price action, the most recent rally pullback and rally began in September, beginning of September 2nd. And there was a little bit of resistance at 6,700. And now it looks like SPX wants to break above that level. So let's take a look now at a shorter time frame. Let's go to a 30-day, 1-hour chart. Again, think or swim, 30-day, 1-hour chart. There's the rally that began at the beginning of September. And then last week, SPX made it up to the 6,700 call wall and found resistance at that level. And there was some consolidation between 6,700 and right around 65.70. And again, right now, SPX attempting to break above the 6,700 level. All right, let's take a look at the levels on this chart. First of all, the dashed lines are showing the expected moves. So the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from yesterday afternoon. And SPX still trading within that range. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, again based on the closing price for SPX from yesterday. So the weekly expected move, those levels remain in place for the entire week. The daily expected moves change every day. And SPX trading within both of those ranges. And note, I do post expected moves for SPX, ES, and NQ every day the day before. And I post those in the Options-Doug chat channel in Discord. All right, let's take a look at the spot gamma levels on this chart. These are shown with the dark red lines. They're based on gamma-weighted open interest. They're provided to Spotgamma subscribers on a variety of trading platforms. Again, this is Thinkorswim. I'm going to point out the key daily levels. So first of all, here's the put wall at 6,500. That's historically the largest net negative gamma that can be expected to act as support. Let me zoom in on this just a little bit so we can get a closer look at the levels in play. All right, so again, the put wall is 6,500. That's the strike world largest net negative gamma that can be expected to act as support. Next level up is the volatility trigger at 66.55. And that level was definitely in play earlier today. We'll take a look at that in just a minute. That's a Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. Note that is based on Spotgamma's older total open interest model. We'll take a look at gamma based on their newer synthetic open interest model in just a minute. All right, next level up, the level that I mentioned before, is the call wall at 6,700. That's a strike where large net positive gamma that can be expected to act as resistance. And that's also the absolute gamma strike. That's a strike where largest absolute positive and negative gamma. And that level did move up to 6,700 yesterday. All right, so today compared with yesterday, the volatility trigger moved higher slightly by about 15 points. All right, so those are the levels in play. Main levels in play for today, the volatility trigger 66.55 and the 6,700 absolute gamma strike call wall. All right, let's wrap up our view of SPX with a 1-minute chart. Then we'll get to Bookmap. All right, so this is price action starting on Monday. Bit of consolidation for the last 2 days. Then what happened yesterday afternoon, that was the end of quarter, and the JP Morgan collar roll took place. And that was right around 1:45 yesterday afternoon, and led to that sharp move higher. And there was a little bit of a gap down today, down toward the volatility trigger. And then price rallied, and I assume the gap down was due to the overnight news of the government shutdown. And now you can see the reaction up to the call wall and really all-time highs. All right, so there's the volatility trigger. Again, at 66.55. And then the call wall, absolute gamma strike at 6,700. And there's the combo level, just up above that. All right, so that's SPX. Again, key levels, volatility trigger on the downside, absolute gamma strike call wall on the upside so far. All right, let's take a quick look at SPY. Then we'll get back to Bookmap. Here's SPY chart. Dark shaded area showing regular trading hours. Support just after the open at this L4 level, large gamma 4 level. There's the SPY 664 volatility trigger. And now SPY trading right around this combo level, which is lining up with the SPX combo level. And the combo levels combine SPY and SPX, gamma weighted open interest into one level, and the SPX chart shown in terms of SPX price, and this chart shown in terms of SPY price. All right, back to Bookmap. All right, so I've focused on SPX and SPY levels, and I do mark those levels on my Bookmap chart. And I use an add-on called Price Lines to do that. That is a bit of a manual process, but I like to have all these levels on my chart. And let me zoom out just a bit. All right, so as I mentioned before, that 66.55 volatility trigger was key. And by the way, the ES to SPX offset today is 50 points. So I'm showing the volatility trigger at 66.55, that's SPX, and that is converted to ES 67.05. And I do post the index relationships that I use every day in the Options-Doug chat channel and Discord. So you can see earlier today, before the cash open, that level was acting as resistance, then support. Support before and after the open. And kind of a key launching point we saw in the SPX chart for a bullish setup today. All right, so again, there is an offset of right around 50 points today. All right, then here's the SPX 6700 absolute gamma strike call wall. Note since there's a 50-point offset, that's lining right up with the ES 6750 level. All right, next level's up above. There's the ES upper daily expected move, and also the SPY 670 absolute gamma strike call wall. All right, so those are the levels in play for the S&P 500. Let's take a look at NASDAQ. All right, NASDAQ, I know there are a lot of lines on this chart. I just wanted to point out I'm showing overnight price action. Just want to point out the importance of the NQ lower daily expected move, acting as support overnight, and now NQ heading up towards its upper daily expected move. And again, I do post those levels. I posted those levels yesterday afternoon in Discord. All right, so again, I know there are a lot of levels on this chart. So let's take a look at the underlying index components so we can isolate some of those levels. And then we'll zoom in so it's not so cluttered. All right, so let's take a look at QQQ. Zoom in on this. So I just noted a couple of areas where the QQQ levels came into play. There's the 599 zero gamma level acting as resistance. This combo 1 level, 596.34 acting as support. A little bit of chop around the volatility trigger. Nahal, welcome. Glad you're here. Nahal asks, where in Discord are those levels? So the levels are not in Discord, but the index relationships that I used to show the QQQ levels and the NDX levels are in Discord. So that's how you can show them in Bookmap. But you would have to subscribe to Spotgamma to get the actual levels. So it would not be fair for me to post those levels in Discord. since they're only available to Spotgamma subscribers. But again, I do post the index relationships you can use to show those levels on your Bookmap chart. All right, so here's the QQQ levels. Break above the 600 call wall, absolute gamma strike. And then QQQ came back and tested that level. And now above this combo 2 level. All right, so those are the QQQ levels. Let's check the NDX levels. All right, key levels. Note, NDX traded down toward the lows from yesterday, making slightly higher lows every time. And this level right here, 24,525, key level for today, right around that level, acting as support just after the open. And now NDX rallying. A little bit of resistance at this large gamma 3 level, and now trading up above that level. All right, so that's NDX, QQQ and NDX, the two underlying indexes for NASDAQ. Now let's zoom in so that this chart is not quite so cluttered. Okay, so here's this NDX 24,525 level that I mentioned before, acting as support. And again, remember the QQQ levels that I mentioned. Resistance at the 599 zero gamma level. Support at 597. A little bit of consolidation at this cluster of levels. Now again, NQ heading up towards its upper daily expected move. So the levels that I pointed out down below are based on QQQ and NDX, and then this is an NQ level, upper daily expected move. Also note there's the NQ 25,000 round number level. All right, so those are the NQ levels. All right, let me talk about shifts in levels. For the S&P 500, again, the volatility trigger shifted higher, and for SPY, the volatility trigger put wall and absolute gamma strike all shifted higher. That is a bullish hat trick for SPY. And then for NDX, volatility trigger shifted higher, put wall lower, and then for QQQ, the put wall shifted higher. All right, most notable was the bullish hat trick for SPY. All right, let's wrap up our positional analysis by taking a look at Gamma that I mentioned before, and then we'll get to the live market. So let's go to Trace, sorry about that. All right, so this is Trace. This is the Trace Gamma Heatmap. It's available to Spotgamma subscribers. And this is showing market maker's gamma position for SPX. Blue shading indicates positive gamma. In positive gamma, we're looking for lower volatility, more mean reverting price action with market makers buying dips and selling reps. And then in negative gamma, we're looking for higher volatility where market makers are trading with price to hedge their delta exposure. So you can see up above, SPX price shown with the white candlesticks, and then this is the hero signal, and hero signal looks very bullish, and SPX heading up into this very strongly positive gamma, shown with the dark blue shading up above, and that's also shown with these GEX bars here, gamma exposure bars, and then the big one is 6750. And let's see, this large positive gamma right here begins at 67.05 up to 67.30. And the call wall, again, remember, is at 6,700. So that's strong positive gamma begins at 67.05, just above the 6,700 call wall. So this should provide some resistance as price moves higher. And if price does drop lower, red shading indicates negative gamma down below. And stability index is now shown at 99% percentile now, percent. So that's a very high stability index. So according to this, not looking for much price movement. All right, so that's the current situation. All right, let's move on. Let's take a look at some setups from today. So let's start with the S&P 500. And as always, I'm going to start by taking a look at what options traders have been doing today. So again, starting with the S&P 500, starting by taking a look at what options traders have been doing today. And to do that, I'm going to look at the HIRO signal. HIRO is Hedging Impact Real-Time Options, HIRO. This is available to Spotgamma subscribers. What this chart is showing is options trades and market maker hedging activity for the S&P 500 index components, two of which we've already taken a look at, SPY and SPX, the other two, ES and XSP. The white line is price for SPX, and the purple line is the HIRO signal. And a rising HIRO signal indicates traders are taking positive delta option positions. They are buying calls and or selling puts. And then a falling HIRO signal indicates they are taking negative delta options positions. They are buying puts and or selling calls. All right, this is the total HIRO signal. Note there is a new version available, and I'm going to switch over to that. And if anyone, I'm open to commentary about which is easier to look at, which is easier to visualize. So this is the updated version of HIRO, and it is a more comprehensive view using trading view charts. And now both price and the HIRO signal are shown with candlesticks. So I'm going to stick to this. Now Hall asks, are these smaller gamma levels respected? They often are, yes. So at any gamma level, I don't automatically trade that. I watch for a definite price reaction in both Bookmap and hedging action and HIRO here to confirm that. All right, so again, want to make sure everyone is clear. I'm looking at the new version of HIRO. This should be available to everyone. This is in production now. The red and green candlesticks are showing SPX price, and then the purple signal is showing the HIRO signal, total signal for calls and puts. So you can see there was a brief bullish opening drive, a bit of a drop down toward the volatility trigger at 66.55, and then traders started taking positive delta positions and price moved higher. All right, let's shift to puts and calls. So just like the previous HIRO signal, orange is showing calls, blue showing puts, direction of lines. The direction of lines indicates options delta, and a rising line for the call signal, orange signal, indicates traders are buying calls, market makers sell the calls. They have to buy, in this case, ES futures to hedge their delta exposure. So by separating out puts and calls, I can get a little bit more of a clue here about this turnaround right around 950. What the blue line is showing is traders started selling puts right around 950. So that line shifts higher before the call line. And then a few minutes later, traders started buying calls, shown by the orange line. And then you have bullish momentum and price moves higher. And then right around 1150, so a couple of hours later, traders start selling calls, buying puts, price consolidates, and then just after 1250, maybe 1 o'clock, traders start aggressively buying calls, selling puts. I don't know, maybe there was some news. I was watching CNBC at that time. I didn't see anything. But right now, traders are buying calls and selling puts, and prices moving higher. So that's the first signal that we can take a look at for the S&P 500. That's the index signal. We can also take a look at the equity signal. And this is showing options trades of market maker hedging activity for the all the 500 stocks in the S&P 500 index. And traders are aggressively buying calls today. And that really started to turn up right around 10 o'clock. So right around 950, traders stopped buying puts, started buying calls at 10, and then price continues to move higher. So now it's really the call buyers driving price higher, shown by the rising orange line. All right, so that is the equity signal. And again, to get to this new version of Hero, there's the switch, to switch to Hero version 2, to get the candlestick view. All right, so let's take a look at Bookmap now. So let's go back. Let me adjust my screen just a little bit here. All right, so remember I mentioned that initial bullish opening drive, a little bit of resistance at this SPY large Gamma 2 level. So Nahal, there's an answer here to the question. Then the pullback. During that time, in that pullback, you can see all the magenta volume dots, aggressive sellers moving the price lower. Large traders are fading that move with iceberg orders, shown by that rising light blue line. Price moves back down toward the 66.55 volatility trigger, and then the put sellers start to come in, call buyers a few minutes later, and then price moves higher and makes a steady uptrend up until right around 1150. Again, when the call buyers, put sellers took the foot off the gas, started buying puts, selling calls, and ES found support right at this level of high liquidity. These are all limit buy orders in the order book. And looks like many of them were not consumed. ES found support at that level. Aggressive buyers start to come in. And now price has broken above the call wall and now trying to move higher. And note, net for the day, all three lines in the subchart are moving higher. Light blue line showing iceberg orders, large traders buying with iceberg orders. In this case, moving in the direction of price, a little bit unusual, but definitely bullish. And then also the rising magenta to dark blue line, cumulative volume delta, actually negative on the day, but rising since the open. And then the yellow line showing stop orders. That's showing buy stop orders helping to fuel that move higher. All right, so far today, the S&P 500 ES continues to move higher. As traders buy ES futures and traders continue to buy calls in the S&P 500 equities and in the index products. So overall, bullish day, a little bit of a choppy start to the day, but got going pretty quickly before right around 10 a.m. All right, let's take a look at NASDAQ. So just like the S&P 500, there are two signals that we can take a look at. First is the NASDAQ index signal that shows options trades and market maker hedging activity for the NASDAQ index components that we've already taken a look at, QQQ and NDX. Now, in this case, the price action is for NDX. That's shown with the green and red candles. Blue line showing puts, orange line showing calls as usual. So what this is showing is right around 950. NDX moved down toward that 24,525 call wall, and that's when traders stopped selling calls, started buying calls, started selling puts, price moved higher, and traders continue to buy calls and sell puts. Take a look at Mag 7. Looks like now this is showing options trades and market maker hedging activity for the stocks known as the Magnificent 7. Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. We'll take a look at several of those stocks in just a minute. Those stocks make up a key component of the NASDAQ and the S&P 500, and they definitely tend to drive the market. So it looks like options traders, the Mag 7, took them a little bit longer to get started, but right around 10 they started buying calls, selling puts, and they continue to do that, and price moves higher. So again, when traders buy calls, sell puts, market makers take the opposite side of those trades, and they have to hedge their delta exposure, in this case by buying the Mag 7 stocks, the individual stocks. All right, back to Bookmap. Let's take a look at NASDAQ. So there's that key support at the NASDAQ, 24,525 call wall level. Price continues to move higher. Again, heading toward the upper daily expected move. Note in this case, in the subchart, aggressive buyers, this is positive on the day, CVD, unlike ES. But unlike ES, large traders have been fading this move with iceberg orders, shown by the falling light blue line. So large traders have been fading this move, but they've been selling with iceberg orders, so far not having much of an impact on price. And then finally, sell stop orders as usual, helping to fuel the move higher. All right, so that's NASDAQ. Any questions about the indexes? Any thoughts, comments on the new version of Hero? I like it. All right, let's take a look at some stocks. Now, before I do that, let me point out the stocks that I like to trade. So I mentioned in my introduction that I believe options trades and market maker hedging activity are key drivers of price in many stocks. That certainly applies to large cap tech stocks. So those are the stocks that I like to trade. So here's the Magnificent 7 right here. Oops. Also Apple. Magnificent 7. Then I've got some other stocks that I like to trade that are also heavily driven by options. I think that provides an edge. So there are a number of ways to find stocks to trade. I know traders like to look at stocks that are moving in the news. I certainly do that. But this is the stocks that I find that are consistently driven by options trades, and I find those easiest to trade. And one way to take a look at that as with tape here. This is showing the top options volume. Oops. This is Spotgamma, top options volume, top daily gamma notional, showing first of all the index products. Makes total sense. Then Tesla and NVIDIA at the top of the list as usual. Other stocks, Apple, Meta, Amazon, Palantir. And those are stocks that consistently appear in this list. We can refresh this. That was from earlier today. All right, so stocks in the news, Pfizer, IBIT, Strategy, Gold. But typically the stocks that I mentioned before, the Mag 7 and AMD, Palantir, Robinhood, are would make often in this list. All right, so let's go back to Apple now. And let's see what options traders are doing in Apple. All right, so what this is showing, this is a bullish opening drive. Traders are aggressively buying calls right at the open, shown by the rising orange line. The flow alert, they're shown a little bit differently now. Flow alert comes in just after the open. And this bullish opening drive was very brief. Just a few minutes. Call buyers took their foot off the gas, and the price consolidates. Then they started buying calls again right after noon. All right, so that's a pretty classic pattern. Two ways to trade that. Get in on the bullish opening drive, either buying calls, buying stock. Second way to trade that is to take a slightly bearish position with either a call peak pattern or a call exhaustion pattern, which is really what this is, more call exhaustion. In that case, you would sell a call spread or buy a put spread. Amir, thanks. Amir says the old version of the hero chart looks like a cleaner chart. Yeah, it kind of does. It's a little bit simpler. I'm going to stick with this for today and see if we can get used to it. All right, so that's Apple. Bullish opening drive, call exhaustion, two ways to play it again. Buy calls, buy stock at the open, take your profits, sell a call spread, buy a put spread with that call exhaustion pattern. So let's go to Bookmap. So you can see this bullish opening drive here lasted about 7 or 8 minutes. It was all over and done with. All right, so that's Apple. Next stock I want to take a look at is Meta. Meta, just the opposite, bearish opening drive, now trying to recover. So Meta opened up above 720 and dropped right down to high liquidity at 715 and then 710 absorption to that level. Looks like those orders were not consumed. And in the order book, these are limit buy orders. So they were consumed at 715 but not at 710. So that's absorption at 710. And now Meta trying to recover. Note the rising cumulative volume delta, aggressive buyers coming in, starting right around 10 a.m. Let's see what options traders are doing. And Rody asked for option spread trades. Do you use limit orders or market orders? Always, always, always limit orders. So with options, I never use market orders. Never, ever, ever use market orders for options. Always use limit orders. Whether you're buying single options or option spreads. That's my recommendation. All right, so let's see what options traders are doing in Meta. All right, Meta, you can see the bearish opening drive, traders selling calls. Price breaks down below the 730 put wall. Full alert comes in just at the open. Then the call sellers take the foot off the gas for a while. Looks like they've come back in. You're welcome, Brody. Yeah, the bid-ask spread can be too wide compared to futures, definitely. So, again, with options, I recommend always using limit orders. All right, so that's Meta. Next stock, NVIDIA. Strong day today. Remember when the indexes started to turn higher? Just that little bit. So remember when the indexes started to move higher? I'm going to have to... Right around 9:50, 10 o'clock. So that's when the call buyers and put sellers came in NVIDIA. And Gurdeep, hello, welcome, glad you're here. Ask, is there any zero-DTE seek and destroy activity in SPX? Yeah, we'll take a look at that. All right, so there's NVIDIA. Kind of a delayed opening drive that lasted about 40 minutes. Traders took the foot off the gas, then started buying calls again right around 12:30, and now have taken the foot off the gas again. So let's go take a look at Bookmap. Go to NVIDIA. So there's that reversal higher, 10 a.m. You can see the shift in volume dots. So angry, aggressive sellers shown by the magenta volume dots. Next test of 184, the sellers are exhausted. Green volume dots show more buyers than sellers. Then a very strong blast as traders buy calls up to 188. NVIDIA couldn't quite make it to that level. Then as the afternoon call buyers came back in, NVIDIA did make it up to 188 and remains near the highs of the day. All right, next stock, Tesla. All right, Rody asks, do I trade zero-DTEs? Occasionally, but only spreads. I do not buy and sell single options. That's just kind of contrary to my my training from traders who were premium sellers. So it's difficult for me to buy and sell an individual option, but single options. But spreads, definitely yes. That's the way I like to trade zero-DTE. All right, it's a very bullish day in Tesla here. Rising cumulative volume delta. And let's see what options traders are doing. Let's go to Tesla. All right, Tesla, call buyers, put sellers, driving price higher. There's that 10 o'clock turnaround. Remember, NVIDIA, Tesla, top two stocks in options volume and driving the indexes. Call buyers come in 10 o'clock, shown by the rising orange line. Put sellers, bullish momentum Call buyers continue to drive price higher at a tune of delta notional 867 billion, and then calls put sellers at 341 million. Amir says, beautiful reaction. NVIDIA, definitely. Really like to trade NVIDIA. It is very often heavily driven by options trades. Rody asks, suppose your credit spread worked great and has no premium left in it. Do you just let it expire or always close? There are a couple ways to trade that. So I would close it, or you can put on an opposing spread, and you would get potentially a risk-free condor type trade. So let's say you sold a put spread in the morning. If you thought you did it in SPX, if you thought SPX price had reached a peak for the day and maybe starting to reverse lower, you could sell a call spread and then potentially leg into a risk-free or very low risk iron condor. All right, so there's Tesla. Let's take a look at Bookmap. Very strong day. Tesla continues to move higher. Got a couple of other stocks to take a look at. Then we'll get a live market. AMD. One thing that I wanted to show here, so bullish opening in AMD. Let me zoom in on this. One thing I wanted to point out here, note these deeper pullbacks. One way to help you find the point where you want to enter in this move up is to use this market pulse price change indicator. And I look for the deeper pullbacks here. And that's shown by the extremes. Note how that lines up with these deeper pullbacks that would be good entry points for long. And this last one didn't line up with a bright red extreme, but it was a low point. All right, let's see what options traders were doing in AMD. All right, so this is another classic pattern. Bullish opening drive, call buyers driving price higher, take the foot off the gas, and AMD consolidates. So again, two ways to play that. Get long stock, buy calls first thing in the morning, or buy a put spread, sell a call spread when you see this call exhaustion pattern. One other stock, Palantir. And I may have to switch to the original version. Go back to V2. All right. So this is bullish momentum. Palantir finds support at the 180 key gamma strike. And that's one thing that I really look for, the reactions, support and resistance at the key levels. Traders start buying calls. They were selling calls a little bit at the beginning. They start buying calls as Palantir finds support at the 180 key gamma strike. And then traders start selling puts, buying calls, shown by the rising blue and orange lines. That's bullish momentum. Price breaks above the 182.50 call wall, so that's a call wall breach. There was a little bit of consolidation in that level, and then traders continue to buy calls, sell puts, and then they took the foot off the gas right around 11:15, and Palantir is consolidating. All right, back to Bookmap. Let's take a look at Palantir. There's that reversal higher at the 180 key gamma strike. Remember 182.50 call wall, a little bit of consolidation at that level, and then a call wall breach. as traders continue to buy calls and sell puts until about 11:15. Now, Palantir consolidating. All right, let's go back to the indexes. Let's go back to ES. All right, so ES continues its journey higher. So in this case, Rhodey, I would not sell a call spread or buy a put spread. In this case, I would just take my profits in the put spread or the put spread or the call spread that I bought earlier. And we can reinforce that decision with trace. So what we're looking for, as Gurdeep asked about the seek and destroy, looking for a 99 percentile strike. So there is one at 67.15. So maybe that will act as support. Resistance with SPX now trading at 67.13. But then the big strike is at 67.50. And that may come, that may be a target for later on this week. Let's zoom in on this just a little bit. So Gurdeep, there's your seek and destroy target for today. It is a 99 percentile strike. And note, as price approaches that level, that gamma is increasing. Remember, gamma is greatest at the money at expiration. So as price approaches that level, expiration approaches, gamma at that level is increasing. 60 minutes ago, 30, and now 10 minutes ago, 76. And that's 76.8 million. Let's go take a look at Bookmap. So remember, with a 50-point offset, that would be at 67.65. And SPX is almost at that level. And then the ES upper daily expected move is just 5 points above that at 67.70. So targets up above, right at SPX 67.15, that large gamma 99 percentile strike. That was the target for today. SPX has achieved that target. And it took it all day to get, almost all day to get there, from 10 a.m. all the way now to 2:30. So setting up a nice gradual move up. So there again, Gertie, there's your seek and destroy. And then the big target maybe for later on, the 67.50. But SPX now firmly in positive gamma. Let's see what options traders are doing. Let's go back to Hero. I'm going to shift back to the total signal, and we can go to S&P equities. So S&P traders continue to buy calls and sell puts in the S&P 500 equities. It looks like that may be slowing down just a little bit. Check the index. Maybe slowing down as well, which would be a natural reaction at that 99 percentile strike. And you're welcome, Gurdeep. And thanks for asking that. Thanks for pointing that out. All right, back to Bookmap. All right, let's take one last look at Hero and Trace. All right, Hero signal overall continues to move higher. Maybe a little bit of consolidation now. Back to trace. Let's take a look at the charm pressure heat map. So charm pressure is showing a potential pinning area 5 points above that. Remember, there is some additional positive gamma up above. So this is showing a potential pin target between the blue buying support below, red selling pressure above. That's due to time decay at 67.20. All right, last call for questions. All right, everyone, thank you very much for watching. Thanks for your questions and comments. And watch out for news about the government shutdown. If government remains shut down, there will be no jobless claims tomorrow, no jobs report on Friday. But that does not seem to matter to traders. All right, everyone, thanks for watching. Thank you very much for your questions and comments. Have a great afternoon, and I will see you next Monday. Thanks. Bye.